Well, welcome everybody to this edition of Market Insights. It is August 25th. Hope you are well wherever you are. It's starting to kind of cool off here. After going through the summer, our highs are typically, mid 90s. I think for the next week or 10 days, the highs are high 70s, which is absolutely perfect. Hope it's perfect wherever you are. All right, let's get to it. See what's going on in the market. The short answer is not a heck of a lot, at least to start this Monday. Quick reminder that trade examples used for educational purposes only, and that everything that we do here is strictly informational. It should not be construed as investment advice. So, what's moving the markets? Well, Powell came out on Friday and very candidly surprised me. I thought that he was going to come off pretty hawkish with that wholesale inflation number from the previous week. I thought that would spook the Fed and give them an excuse not to cut rates. But instead, he talked about the weakening in the labor market. He said that he now believes there's been a shift of risk away from inflation and into basic economics, and that it may now be appropriate to cut rates. And the market loved it. So the United States has taken a 10% stake in Intel. So apparently, we, Trump, cut a deal with Intel. We're giving Intel no money. And in exchange for certain concessions, like we'll allow you to do this, or we won't hit you with tariffs on that, give us 10% of your business. I'm a business owner. If the government tried to cut a deal and take 10% of one of my businesses, now I'm not a big publicly traded company, but there's just something that feels a little off to that. So, how many businesses are we going to take a stake in? Put up no money, but we want to own part of your company. We want to own 10% of your stock. Shouldn't government be separate from private enterprise? Isn't that why they call it private versus public? I don't know. Maybe it's just me. Maybe I'm overly sensitive to this topic. I am a capitalist. I believe in incentives, and I don't believe that we should be beholden to the government when we're running our businesses. But it's helped the price of Intel stock. NVIDIA is moving higher in advance of their earnings announcement, which will be coming out on Wednesday. So I think analysts are expecting that NVIDIA is going to hit it out of the park. 10-year Treasury is sitting pretty comfortably at 4.289. And oil prices are steady. They've moved up just a little bit. They're at 64, 68, I think last week. We're at 63 and change. So here's the scoreboard. Year-to-date returns, the Dow, 30 blue chip stocks up 7.3% on the year. The S&P right at 10%. So that's 500 large cap stocks. The NASDAQ, tech heavy, 11.3%. Taking a look at PE ratios. First of all, I'm going to tell you PE ratios are overrated in terms of evaluation and determining value. Right now on the SP 500, we're at 22.4, which is relatively high. but it does not take into account the earnings growth rate. You need to combine those two. But what is interesting to me, so they've been talking about the fact that the Russell 2000, which consists of 2,000 small cap stocks, it hasn't kept up this year with other market averages. Hence, it should be considered relatively cheap. But look at the Russell 2000 has a PE higher than the S&P 500. So why take the risk on the smaller cap names? PE on the NASDAQ, 28.5. And then you see the dividend yield. Dividend yield on the S&P 500 is 1.16. I mean, dividends are skimpy compared to stock prices. Stock valuations are now at all-time highs. So using a metrics including trailing PE, forward PE, the CAPE, price to book, price to sales, EBITDA. I mean, look where we're at, right at the top. So I think about that and the fact that we're moving into September. September, generally a down month. That could be a volatile combination. What should we be watching for this week? I'm telling you, well, you got the earnings announcement with NVIDIA, but outside of that, Friday is really the day. Now, on Tuesday, tomorrow, we get consumer confidence coming out. I don't think that'll be any big shakes. Thursday, as always, we get initial jobless claims. We get our first revision for GDP, but look what we've got Friday. Personal income, personal spending, PCE, income, that's personal consumption expenditure. This is the preferred metrics for the Fed when measuring inflation. You have core PCE year over year, it is looking like it's going to tick up just a little bit. So Friday, that news could definitely move the market, as could NVIDIA's comments on Wednesday. Last week's heat map, certainly more green than red. Walmart missed on earnings. They beat on guidance. I think Walmart could be well positioned. Palantir took a pretty big hit. Watch for that to bounce. AMD down about 4.5%, and a lot of green. Market sentiment is still pretty tepid. You know, when asking individual investors, what do you think the market's going to do over the next 6 months? Typically, it's 37.5% bullish right now, 30.8. It's generally 31% bearish right now, 44.8. So investors are a little nervous. This week's earnings, it is all about NVIDIA. On Wednesday after the close, compared to NVIDIA, I don't think any of these, I mean, is Dick's going to move the market or Dell? I don't think so. So it's NVIDIA's week. Let's take a look at the charts. See what we got cooking. Let's pull up the S&P 500. So this is the chart for the last 6 months. So you can see the V-shaped recovery in April crossed above the 50-day moving average. And since then, you know, beginning of May, we've been off to the races. That was that big move from what? From Powell's announcement. Not much happening so far today. Tech's up a little bit. Let's see what the Qs look like. Yeah, so they're up. You can thank NVIDIA for that. I think it was up 2% this morning. So charts are in good shape. Fed's going to cut more than likely in September. And let's just see. The Fed cutting could be exactly what might balance out, you know, the September swoon. Let's hope so. All right. I hope you have a fantastic rest of the week, and I'll check in with you next week. All right. Bye for now.